365. Welcome everybody and welcome to a video I'm actually very excited about. In this video I'm going to be teaching you a basic schematic to follow for liquidity, right? So one of the main reasons that people get stopped out in trading is because number one, they have no idea what they're doing, but also number two, they sometimes find themselves on the wrong side of the market, which is technically linked to number one. And then number three, they don't know how to read obviously basic things, market structure, supply and demand, smart money concepts, but really they don't have a schematic way to trace liquidity. Just to be very clear, honest, and upfront, this is a concept video. So what I'm doing is I'm giving you guys a beautiful skeleton framework body to work with. All right, this is literally me taking things off from my module 3 that will not be in the actual course, right? So this is what we can share with the YouTube family. But if you do want to get all my lectures and lessons, you can see I really go above and beyond. Make sure you hit the link down below and register for 365 course enrollment and get access now to module 1, 2, module 3 to drop soon. But also very important, just a kind reminder, on the 4th of October, Tuesday, I go live. On the 4th of October, we stop everything and we are teaching privately, right? So registered students, we're going to be doing trading psychology first. But it'll be my first live take on the trading psychology series, which I think will last for about 3 weeks, right, in the month of October. And then straight after that, we'll then either decide to start from module 3, smart money concepts, but I think we'll start from the basics, module 1, module 2, module 3, up until we're done. Frequently asked questions, who can come? If you're already a 365 student, if you're already registered last year, registered on Monday, registered today, registered anywhere before the 1st of October, it's completely for free for you, all right? Remember, we don't have a module, a business module where we live off students. So it's always for free. As long as you're a registered student, come for free. All 4 modules for free, all right? But if you're first time, then you must register. So you must kind of like join us, get access to module 1, module 2, etc. And I would do that now than wait for the live intake, because the prices for the live intake will be a little bit inflated to take into consideration the type of value add we're doing, number one. But number two, it's 4 long modules. I mean, 2 modules used to take me about 8 weeks to get through. All right, so now I'm adding another 2 on top of that. So it's October till December. Come learn how to trade properly and be done with not knowing what to do in the markets, right? So I just wanted to start off with that, right? So today I want to do a quick but almost like a lecture type. So you're going to get a sense of how I am like, when I'm running my classes, right? So I'm going to be carefully walking you through a basic concept, like I said, a skeleton concept on how to track liquidity. Why? Because liquidity governs the market. Liquidity is really the reason why smart money is here and the reason why smart money believes you exist, right? You think you're here to become a millionaire? Well, trading, never forget, trading is basically the function of wealth transference from your pocket into another person's pocket. Money goes to the better trader all the time, right? It's simple. When I lose a trade, there's a better trader on the other side, of my trade. Whether they use algorithms, softwares, it does not matter. They were still the better trader. And so one of the ways to combat that in our trading is to really understand this liquidity structure. So I've been doing, this series around day trading for a while now. And so that's what I'm going to kind of like target this to. Right, inside my course, when I start to work you through smart money concepts and liquidity stuff, you will notice I'll be referring to both day trading and swing trading. But today, we're just going to stick to a day trading version of this, because that's what most retail traders want to do and what they're doing. And you know that because of the time frames they use. And some of you think you're swing traders, but your analysis, your entry, your exits are based on very small time frames, right? So all you're doing is taking a gamble on price, right? So just be very careful with that, right? So I want you to start. So let me start quickly, right? So this concept is going to be around retail traders' perspective. That's rule number 1. So when I teach Forex, stocks, crypto, I like to take a rule-based approach. Rules are so fundamentally important to profitable trading. I don't have to guess what the markets are going to do. I simply have to execute my trade based on my rules. If my trades lose today and my rules have been back tested and successfully proven that over time, on a scale of probabilities, I will always make more than I lose. All I have to do tomorrow is to repeat the same rules. No fear, no FOMO, no excitement, clean neutrality. That is the starting point of a mindset that is generally going to make it in this industry. Stay neutral. All right. So what I want us to do and how I want us to view this thing is to understand the basic, skeleton version of the concept around liquidity. We must understand why it exists. And like I said earlier on, it is fundamentally for retail traders, right? So we need to have some basic understanding of retail trader perspectives. Not only that, we need to know their strategies. We really want to know what they see. That's all I'm trying to get at, what they see, right? So not what supply and demand traders see. As things get more popular on social media, you'll start to think that these issues are new. They're not new. The other day, I saw someone write, a smart money concept is now the new liquidity, right? Whenever you see stuff, people come up with new strategies all the time. It means you don't have the discipline and the fortitude to actually test something out and wait the process, really wait the process, right? And smart money hasn't changed their gameplay in over 100 years. Since the Great Depression of 1930-something, during the Hitler, World War II war, supply and demand was the thing. Smart money hasn't changed this concept since the beginning of the very first pit of the stock exchange, the older pits, the Chicago Mercantile Stock Exchange. It's always been supply and demand. The reason why you find so many retail traders not only jumping from strategy to strategy, but creating new strategies is simply because the old ways are still completely blurred to them. All right. And if you don't know something, it is so much easier to blame the whole world than simply your lack of knowledge. Right. So we must understand basic retail perspectives. And I really mean the basic stuff. Right. So the first one that most people know when they come to 365, if they have been trading before, is this one, right? The old school support and resistance. I'm not going to teach you the strategy. I'm going to just simply explain it to you. Right, so the top part is resistance. Why? Because it's generally earmarked as a selling point for price, where price via market memory and via trading psychological levels has come to several times in the past, and price has been rejected. And so at resistance, markets fall, or the perception is that markets fall. Be very careful. I'm going to be very careful with my words. The perspectives of retail traders is that price falls at a resistance and price goes up at a support. And so really what you want to see and what you want to trade is a range from this retail trader perspective, right? So you want to buy at a support and have a range at a resistance, and buy at a support and have a range at a resistance. And because of that, human beings over time, and I've gone through this in different videos, about 3 war rooms ago, I can't remember which war room it was, I literally had a section in there about algorithms and how smart money uses algorithms. And I explained to you guys why that is important. It's inside a war room. Maybe later on this weekend, I'll take it out of that war room and then re-upload just that part onto the YouTube channel. Because if you don't understand the algorithms behind trading, you will always be stuck on the wrong side. But this is going to kind of like help you out here. Right, so as a retail trader, all I have to do is understand this range in the market, and I simply do what my trading strategist told me to do. If I'm at a resistance, all I'm going to do is sell. If I'm at a support, all I'm going to do according to price is buy. I mean, there are many other small slight adjustment things that they bring up, like, the trend is your friend and all that kind of nonsense. But, invariably, most retail traders will buy at a support despite the fact the trend is falling, because they are not really well versed in proper trend reading, right? A lot of people think just because your moving averages are pointing down, it's a downward trend, right? We'll talk about all this stuff later on, right? So this is simple, right? You sell at resistance, you buy at support. Now, this has been the way of life for a lot of retail traders. Now, liquidity, then, in this particular example, in this understanding, are the orders, all right? And I'm going to take this nice and slow because you need to get it. Liquidity are the orders in the market. I'm typing so that you can be writing notes wherever you are, right? If you've never been to any of my classes, I type so that, my frontal lobe doesn't move faster than my mouth, right? So I'm slowing myself down, right? I don't know if you guys have noticed, but I have a big scar on my head, all right? So and it's nothing weird or whatever, but technically speaking, my brain moves slightly just a couple of seconds ahead of the way I orate or speak. So when I write things down, it slows me down. I can talk at the same rate of my thoughts, generally speaking, right? So let's do this again. Liquidity are the orders in the market, right? Any type of orders. Okay, so I want you to understand that any type of orders. What are orders? You use them a lot. Buy stop, that's an order. Sell stop, that's an order. A buy limit, that's an order. All right. All these pending orders and sell limit and non-pending orders. There are 2 or 3 more outside of this. And obviously the most popular one when you market execute. And so liquidity is your money on the market space. Remember, if you're selling at a resistance, you have been taught by God knows who to have your stop loss just above that area. Based on some of you calculate pips on how often price will bounce to resistance. Some of you create your own support and resistance zones. All right. Some of you look at the previous candle, right? Some of you have been taught to look at the previous candle, and if the body of the previous candle or the wick of the previous candle is that high, then some of you have been taught to put your stop loss there. Or whatever the case is, these sell stop orders, the stop orders, the buy limit orders, all those type of orders are different forms of liquidity. Liquidity is money, your money, when you put your money on the line. And so essentially, if you remember one more time what I say, trading is the function of transferring money from your pocket to my pocket, or smart money's taking retail money from their pockets, blah, blah, blah. It's very important to know where that money is located. That is liquidity. It's very, very important. All right. This is what all smart money concept is about. This is what people have been waiting for in the so-called Module 3 series. And I understand you guys want it. I'm so glad not a single student has actually paid the actual cost for that module. Otherwise, people would be trying to hang me. But I really hope you've mastered Module 1 and 2. It's so paramount that you have a good swing trading system in place. It's absolutely paramount, because by now that would have taught you patience, that would have taught you market awareness, that would have taught you market long-term trend, and understanding that who makes the most money in the markets is the banks. And if you ideally want to be, very successful, you must have a good swing trade background, right? You can come into day trading, no problem. And it's fun, it's enjoyable, it's action-packed. But as long as you don't know how to handle swing losses, as long as you don't know how to hold a losing trade for 3-4 days before it goes your way, I want you to know not a single thing is going to change in your life, right, until you master the basics. Nothing. I want to be honest. I really want to be honest, right? This is literally not a me problem. It's a you discovery process. It's a you journey. But we'll deal with this stuff. 4th of October, once again, I am going live, starting with the trading psychology module. Got to deal with these things this year. We really must get more 6-figure traders, right? And I'm picking up what the problem is slowly but surely, right? So this is what liquidity is. This is where the markets are. Now, once again, the basic concept to most retail trading strategies, whether it's the MACD with indicators, the moving average, most 90-something% of all retail trading, breakout strategies, every single one of those city strategies, and there are a lot of them. There are a lot of retail trading strategies. And just so we're clear, I genuinely have PTSD from all these retail trading strategies. When I did my master's with the International Federation of Technical Analysis, which is what, when you join a broker, so a broker would, or as soon as you join a broker legally, a broker must send you emails about free education, all right, where you must understand thoroughly that, look, what you're doing is risky, you can lose money in the Forex market. Legally, a good broker, a regulated broker, has no choice but to provide a free course. If you've got a good broker, on their website, there should be seminars and free educations. The people licensed, okay, to give out that free education are generally licensed by the International Federation of Technical Analysis. In fact, anyone can kind of like get that education. And in there, they just drill you, man. I was drilled with all these technical analysis stuff. There's the CFTE level 1 material, and then there's CFT level 2. And if you pass both of them, you can do a master's in 2 years. And I literally still have PTSD. I mean, there's some technical analysis stuff that you guys don't really know, like even as retail traders. I mean, talk about Dow theory, reversal patterns, consolidation forms, support and resistance, the trend lines, the channels, commodity charts. There's a whole list of ways of which this technical stuff is broken down. There's the theoretical construction of technical analysis. It goes on and on and on. But all in all that stuff is just trained to teach people to view price the same way. And most of it is an aggregate of the simple version of support and resistance. The support and resistance in trend lines, right? So I'm just saying it's all the same. Liquidity across structure is all the same when you know what you're looking for. Right now, given this in front of us, I'm going to start looking for a couple of examples then to get to the main point. Now, if, for example, we are now thinking from this perspective now of smart money. Now, if smart money was to artificially pump price, any price, so let's think about a buy setup. So smart money wants to buy, generally speaking, your charts on some type of fractality or some type of continuation on the timeline would eventually have to produce the following, right? So there would have to be a couple of contacts so that you have a support, and you come up with, if you go to Baby Pips, another free website which is so good at teaching everything about Forex except on how to become profitable, right? You'll realize that there's just market longevity, there's market memory, there's all these things about how market comes back a couple of times and area becomes more stronger, more reliable. And so the broker and the way money is moved around will print that pattern. It will print multiple touches on a support so that you can be focused on buying here, because after all, it worked there, it worked there, it worked there, blah, blah, blah. Now, if smart money is to artificially pump price down, all right, so I'm saying you are about to buy here on your support zone, and this is what happens all the time. I really want to be clear about that. And this happens where price is artificially pushed down. We would like to say, and this is important, you get these things right, we say buy side liquidity is gone, right? Buy side liquidity has been taken out. Why? Because the people wanted to buy here, right, on this support. Where were their stop losses? Well, their stop losses were somewhere here, right? You know them, right? They were all of them were all stopped out in the zone. And so price was pushed down on purpose by smart money. So buy side liquidity is leaving the market, or people who are buying this market are being forced out, right? And this is absolutely important because the basic form of support and resistance comes with different, additions. For example, there is something very common in retail trading called the breakout strategy. And the breakout strategy is a simple thing. So, for example, in this particular case, if markets were to break support, to the downside, then that means price has changed its mind or whatever they tell you, and so they expect a retest, and then markets going to go down together. So they want a retest of the zone there. But I'm pretty sure this is common sense to anyone who's traded before. Now, as buy-side liquidity is being taken out, right? The next thing that retail traders and those algorithms that I told you guys about, the video that I made for you guys, that forum, the algorithm doesn't tell smart money what to do. The algorithm collects historical information, everyday information of what a retail trader is most likely to do based on what they've been taught to see. And smart money's job is to continue doing its job, which is to execute the very opposite of what most retail or most market participants expect is going to happen. So when buy-side liquidity gets taken out, the next thing that a retail trader has been taught to look for is that breakout stuff, right? So, okay, fine, support was broken. So this zone becomes a resistance. It was once upon a support, now it's a resistance, and price must come back and retest and sell. Now, if you're going to sell the retest, what does that mean? It means your stop losses are now here as well. So let's say, and this happens to a lot of retail traders, you lose a trade, you jump back into the market. We like to call that revenge trading. Some of it is not even revenge trade. Some of it is just complete ill-disciplined, 9 out of 10 times, right? So you got stopped out by this market buying, right? Your stop loss got hit here, so you have to open a sell because you now believe price is now going down, the trend has changed. All that structuring that you put into it play, you now have your stop loss here. And so what that does now is there will be a lot of selling opened by retail traders. But let's start the whole thing again. I want to repeat myself very carefully. Listen to me. The artificial move down is started by smart money. So smart money pushes price down. Retail traders see a couple of things: break and support. When they start to do their candlestick price naked chart reading, all that stuff that they like to talk about, right? Which is sometimes very important, by the way. All of a sudden they see these big red candles, right? All of a sudden there's now some type of confirmation to sell. And so what a retail trader will do, there'll be two types of retail traders all the time. There's the impatient one, the one that will never make it in this market, who will start to sell immediately, right? So as prices leave in here, printing big red candles, breaking the support, a retail trader will open a sell stop so as to continue with price going down here. Remember, liquidity is any type of order you will put into the markets, right? And there are another group, the graduates, the masters of support and resistance, or the master retail traders. Most of you guys as Forex mentors will charge you 6,000 rands for free PDFs, man. It's ridiculous, absolutely ridiculous. But each to their own, who will wait for a retest of the zone. So they won't sell here, they won't be dumb, right? They'll wait for the zone to start, and then they'll put sell orders, stop losses up there. Wherever you are, this becomes a new place to trap. Remember, buy side liquidity is done, but now sell side liquidity is entered as retail traders also now start to try and push price down with their own money. But I keep coming back to this because it's very important. The first person who pushed the move down is smart money. So understand this: smart money has put money on the line to push price down, right? So there are smart money open sell orders pushing price down. Retailers join and start to also want to push price down. In here is a psychological lesson, by the way. Never chase a trade, all right? You buy, you lose, you move on. You assume it's selling, you start to sell, you lose again. You never chase a trade. But that's not what I want to kind of like highlight right now. So I hope we're all together. Smart money is push money to push price down. Now remember, because everyone, and here I'm talking about retail, everyone here is retail, is buying at the support, or was buying at the support here when there was buy side liquidity, right? That means there is enough liquidity to sell. Very important. If I want a car, there must be someone selling a car to me. If I want a car, there has to be someone selling the car. If I want bread, I must go to Pick and Pay, and Pick and Pay must exist in capitalism and sell bread for money. I cannot buy something that no one is selling. The same is true in trading. There must be the other side, because everybody here wants to buy, because everyone here was trying to buy. There is enough liquidity to sell, so that they here is smart money. When smart money comes to push price down, this will immediately create an imitation of selling, right? So retail people join, breakout strategy, whatever it is, and then get taken out, right? I know I'm repeating myself, but it's so important. I'm clear and very slow. Now, when retail traders sell, right, that is when smart money can start buying. Once again, if I want a car, there must be someone on the other side to sell it. If I want to sell a house, there must be someone on the other side to want to buy. So when this takes place, whether you start to sell here or you wait for your retest and you start to sell there, when smart money starts to realize that, fine, the sheep are now following, that's when they want to start buying. Number one, they've removed buy side liquidity. It's just them in the market, and they want to move like that. Now, they get retail liquidity. They've taken out buy side liquidity, right? And that's the liquidity that they needed to do the following, right? So price starts to get pushed up. So far, if you're taking notes, your key lessons here need to be, number one, know where the retail traders are going to buy. So before I open those day trades that you guys are seeing me do on the Euro USD scenario analysis, according to my trading plan, before I make a move, I need to know where retail money is, because I don't want to be there, right? So know where retail traders are. Are they buying or selling? If they are, where are they buying or selling? This is different from me asking you, is the trend buying or selling? I want you to understand this. I'm not asking you about the trend or market direction. I am saying, where are the dum-dums? Where are the dum-dums tonight? Where are the dum-dums this session? Where are the dum-dums in the Euro, in the London session, in the New York session? Where are they? You need to know. You must be able to identify them by simply this simple structure, finding their type of strategies. All right. Now, what smart money will do is smart money will take a calculated risk. Remember, I said here, smart money has to use real money to push price down. Everything we do in trading is risk, including smart money. All right, and I'm gonna give you guys an incredible example if I remember. I hope I remember. Let me just type it in the whiteboard. Just ignore this because sometimes I kick myself at night every time I do a video. There's something I forgot to say. So I'm gonna put GameStop here because this is like one of the most contemporary examples to ever hit, the markets in the last 2 years, where smart money lost a lot of money because of a miscalculation and risks and organized retail activity, which is very rare, right? What retailers did to smart money last year with GameStop stock, right, is what smart money does to retailers every single day. That's why it was so impactful and revolutionary to become a part of that. If you were, right? So now, smart money must take a calculated risk. We're back to this point here. To push price down at a support, they must take a calculated risk to push price down at a support. Everything costs money, so it has to be real money. When smart money pushes price down at the support and opening those sales, they'll be doing so to lower the liquidity, right? Take out that buy side liquidity. They also want, but also to push out their own buys. So after the push down, price will then come back up, right? So we have this situation here. I'm going to give you some live charts literally that happened yesterday, which is how I made that trade if you're following the Euro USD series, because this stuff happens all the time, right? Now, when they push price up, this is what a lot of people don't know, or maybe do know, I don't know, I'm going to tell you anyways. When they start to push price up, right, after they've destroyed retail traders here, please don't forget that there is this issue. There is this issue here. This is the main problem. The fact that they have money that is used to push price down, even though they now want to buy. So what smart money has to do, it almost has no choice, right? Basically, in the way this whole trading thing is set up, it has no choice but to hold a drawdown. All right, so I need space now. I need space on the whiteboard, right? So we've got all this stuff here. So let's say this is what happens real quick. Prices then, they decide, okay, fine, we're going back up. So guess what? Who gets taken out? All the sellers here, right? Remember, we took out buy side liquidity here, then we had new sells here and stop losses there. So all this gets taken out, and now they're pushing price up. When they push price up and price is now going in that direction, they've taken out liquidity here for buyers, sell side liquidity, but they are still holding a drawdown, right? They're still holding negative profit money, the money that they use to hold price down. And this is literally built in my module 1 and 2. It's literally there. Right? I mean, honestly speaking, if you check this out, if you come here to module 1, those of you the registered students, right, on the drive, I mean, this is the newer platform, blah, blah, blah. But you have access to my module 1 lectures. If you come, I'm just trying to think. Well, when I started teaching you guys about imbalances, you know the imbalance, how to correctly calculate the imbalance. So I'm pretty sure it's after we've combined all these lectures, we've combined all the different types of supply and demand. I mean, I know each lecture is about 2 hours, 1 hour, 50 minutes, whatever, supply and demand too. But somewhere in the old basics lectures, module 1, especially from lecture 11, let's put this all together, the bonus video, and I get into multiple time frame analysis, right? These 3 lectures, if we can come back to these 3, lectures, multiple part analysis part 1, but the previous video lecture 30 with the bonus video, and also putting all the rules together. You remember when we're doing module 1, registered students, we always wait for smart money to move first. So I embedded that, because when I was designing the swing trader course, I never thought I'd have to come back and redo it. I never thought I'd have to come back and add anything. This is why we wait. Remember, guys, I always tell you guys, smart money moves first. Then you see an imbalance of smart money moving first, and then you wait for smart money to come back. So when you want to understand smart money concepts now, this is why they come back. They don't come back because they've forgotten the direction in which they were going. That is not why they come back. Smart money will always come back, right? So let's say they go up here. In fact, I need space, comrades. I need space. Let's clear this thing up. Let's clear this thing up. Let's quickly do this. Right, so you got your resistance here, you got your support. If you like this video, like the video, right? If you like the video, like the video. If you love the video and you're not yet subscribed, please do subscribe. If the video's still subscribe if it's helping you, right? Now check this out. Don't forget, there was support. People got taken out. Now all of a sudden, there was this, people got taken out here because smart money then did this and pushed up. So when they push up, right, don't forget they use real money to push price down. Yes, they've collected a lot of liquidity, but they're still holding negative trades. On my floor, I only have 12 traders. We are good, man. We're a small, neat group of traders, but we're only 12. 12. All right, I'm trader number 13, but most of the time I'm doing my own thing, and predominantly my job is to manage my traders and also hedge them. So I can't take the same trades that they take in most of the time. My floor traders, I'm not going to draw 12 people, it's going to take forever. My floor traders force me, technically speaking, to discover new markets for myself because I am constantly having to cover them. So if they're Euro USD, I also can't go Euro USD because if we all lose, the fund loses money even quicker, all right? But out of the 12 traders, there are 4 types. There are 4 traders out of the 12 who, generally speaking, number one, are not going to be swing traders. So they're not like me, like a swing trader. They're intraday traders, okay? I'm just telling you guys how most flows work, right? I built my flow model around successful flow models, Goldman Sachs and all that stuff. I do that research to know how to manage a trading flow. So my 4 traders are day traders. These guys generally keep our P&L fluctuating up and down. Sometimes they're very, very bad big days. Sometimes they've got very, very good days. My swing traders are my equity traders, right? We hold the fort so as to continue allowing for some type of capital to trade another day, so to speak. Now, I'm bringing this up because it's absolutely important you understand that smart money moves the same. Smart money can be buying an asset extremely, like I would have about 8 traders in buys while 4 traders are selling something else. Smart money does this to another level. Smart money can be buying Euro USD while holding Euro USD sells. They have that type of capital. Now, the reason why in my module 1, module 2, I always tell you guys, wait for the imbalance to happen, see it happen, and then wait for price to come back. That is why I built module 1 like that. It's because when it comes to smart money concepts, there is a concept called mitigation. An order block needs to be mitigated. Now, I don't want to talk about order blocks in this video, but we're going to get into it just a little bit. I don't even know why I forced everything out into the corner, right? Since we're redoing this whole thing again, I apologize. Right, I apologize. I'll be very quick. Right, there's your resistance. Boom. This is your support. Bam. Right. Let's give us a little bit of room. Right. So all of a sudden, everyone was screwed over here. People got screwed over there, and markets went up right there. Right. Now, this zone here is what I'm talking about. Is smart money is money that is being used to push price down. Yes, they've taken liquidity. Yes, they're in profits for their buys, but they are still holding their sells. And then we come now or look for the order block, the 7 or 8 types of order blocks. There are many order blocks, types of supplies and demands that we've spoken about in the course. There's a specific one in there. If you couple that stuff with break of market structure, change of character, the order block that starts that whole thing, you will notice that it is where price is always going to come back and mitigate. So that's why markets come back. That's why I taught you guys to wait for the imbalance to first happen and money to come back. When money comes back to mitigate an order block, it is not just to provide an entry for us retail traders. No. There is no ways. Imagine you open cells down here. Right, you open cells down there, but now price is all the way up here. Those cells are in a loss, and so to do that, you take slight profits on your buys, right? And immediately when smart money starts to take profits, if you follow in COT data, you'll notice that every time there's profits, price slows down and turns. So if they close their selling orders and start to beef up their buys, price will start to. If they close their sells, right, price start to go up. But if they close some longs, price starts to drop. And this is accelerated because they need to come mitigate some losses. Remember, you started to open cells there, right? Cells, they're pushing price down. And now price is here. That means these cells are at a massive drawdown. So you must push price down as smart money. You must push price down as smart money to mitigate these losses. You see now price is getting down. Price is now by your entry point. Oh, look now. All of a sudden, your sales that you opened last week are now finally in small profits, and then you can now continue with your trend. Trend is your friend as price continues to go up. I hope that made sense. I really hope what I just showed you right now made sense, because it's absolutely important. So let's put it all together in a set of rules. So if you've been following my Euro USD series, and if you haven't, I'd encourage you to see through scenario analysis, part 1, part 2, part 3, part 4, part 5, and probably by the time this video is out, there'll be a part 6 or whatever, because I'm trying to show you this day trading stuff. This is what you need to understand. Number one, you need to know your stuff. So you need to know your supply and demand, because your supply and demand is going to govern. Guys, I'm giving you day trading rules. I am dropping this on YouTube for free. I'm giving you day trading rules, right? So you have to understand this. So first of all, you need to know your supply and demand. Then you need to understand in relation to supply and demand, the trend. What is the trend in relation to supply and demand? A good place to start is the daily chart. You must understand whether price is leaving a daily demand going to a daily supply, or a daily supply going to a daily demand. You have to know that kind of stuff. And then you depend on your session, right? Sessions are important, right? I can't teach on all of this stuff today, but I'll keep on building around this series, right? Remember, we hammered sessions out in module 2. I know I'm talking to two groups of people: 365 current students who are mining and trying to master this stuff, and just the general public. But if you're a registered student, you have to remember the power of trading sessions, right? Come back to module 2. So after you've mastered the basics in module 1, where's module 2? Right, come here, right, module 2, our trader's edge. And when I started to teach you guys how to trade indices, that stuff applies across currencies, stocks, all that kind of stuff. Where is it? There's a part where I started to tell you about trading such day, a deeper look to indice trading. Money flows around the sun. This is very important. You must absolutely nail. This is a 3-hour lecture, right? This is not like this is real stuff, man. I've been cooking stuff for you guys for a very long time, right? This beautiful 3-hour lecture on trading sessions is absolutely crucial. But what I've been doing on the YouTube channel is also teaching you guys about the London session, which is my favorite session to trade currencies. Because in the morning session, unfortunately, in the New York session in the afternoon, sorry, I like trading stocks. So you must understand sessions. So for the most part, for the series for currencies, and for a beginner trader, we'll be focused on the London session, which is 9 a.m. South African time, up until about 4 p.m., etc. Right. So you must know the sessions. The euro, for example, is notorious for either creating the high of the trading day or the low of the trading day. That's why the session in open time for me is important. That's why, and understanding your session comes with a lot of things, right? I'm building rules here. So you need to understand your asset, right? So the asset management that we did in part 1, knowing your asset, right? How many pips on average does it move? And when it consolidates, how many pips on average does it consolidate? How many days does Euro USD on the 1-hour time frame consolidate from? It's not that hard. You just sit down, you draw lines, you observe stuff, you draw your supply and demand zones, and you see how many times are demands broken in line with a supply trend. For example, you ask yourself these basic questions so you know thy asset. You must know your asset. This is the job, guys. This is the job. Forget easy money. Forget the Forex gurus on Instagram lying to you. Forget the flashy cars. Forget stuff, dumb stuff. If it's got nothing to do with you, you want information. You get the right amount of information, you can change your life. Stop falling for, you can master the stuff in 15 minutes. You cannot. You cannot. My course won't even take you 15 minutes to complete. If you're joining 365, before you even pay, I want you to know we are learning academy. We learn. I force you to learn. You must master this. It will take you time. Forget this idea that you're joining, you become a millionaire tomorrow. Don't join. Please do not join my stuff if you are that in a rush to become a billionaire or whatever it was, right? You need time to master this information. So know your assets. Take the time to study your assets, right? It won't take you too long, but you need to know your assets. Once you know the average of what you can expect in terms of price movement in the session that you're doing, you understand the daily chart and the trend that is coming from, you have mastered supply and demand, then you start to look for simple things. First of all, you want to see where are the retail traders, the stuff that I just showed you right now. You must know where the liquidity is. Why? You don't want to be a part of that. You don't want your money there. You don't want your money there. And so when you understand the liquidity part about it, you then want to know, what type of smart money concepts are at play in that particular chart. Here I'm talking about small, simple things. There are many things we can cover, but so far on the channel, I've covered breakout market structure and change of character with you, right? So you want to see those things because those things are communicating to you, right? If you ever heard me say this, I'll say it again. Price is everything, right? That means everything I ever need to know about price is in price. Price is everything. Price is everything. And then I say prices in everything. That means we never need an indicator because indicators are lagging, but the market itself is a futuristic indicator. It prices in where it's going. So if I understand supply and demand and I understand my trend reading, I can now better speculate where price is going. But here's the most important rule for day traders. The most important principle I build in module 1, price is fractal. Fractality talks about how the market structures are the same, 1 minute to 15 minutes to 1 hour to daily, weekly, monthly, 3 months chart. There is fractality in trend. Now, we use the higher time frames, for example, here, a daily chart to discover intraday trend, right, to see where price is going, right? So we use the big time frames to understand the trend, to see where price is going, to project where, what's been priced in. But we look at lower time frames to get the formation of that journey. I hope that makes sense. So from prices fractal, you will start to notice that every time there is a change of character, you're not going to catch the very first change of character on the daily. You're going to catch it on the 5, 15 minutes, 1 hour eventually, right? It starts off on the smaller time frames, where as a day trader, you have to move. You have to be on top of that. Day traders, I never understood it. When we used to hire people, we used to have people on 6 months contracts, not because I'm a terrible boss or whatever, but I just needed to understand people's characters. If you're a day trader on the floor, those 4 specific guys I spoke about on my floor, the ones I chose, day traders, your job is to see charts the whole damn day. Every candlestick formation is money and it matters to you, because if you miss a change of character and you miss a confirmation entry, you're never going to hit your targets. A day trader's job is to day trade. You don't have time to be, daydreaming around. Right? So these small things happen at, very sensitive times. So like that example that we had earlier on, where we have support, we have resistance, and then we have boom. So let's say markets have been falling. Right. Let's say the bigger trend has been this. Right. So clearly markets fall, and eventually markets fall. You see right there, when markets fall here, you have a break of structure. Once again, don't get confused. Remember, earlier on we said there was a support here. Retail traders are looking to buy. Buy side liquidity is taken out. There is a break of structure. Break of structure means the trend is going to continue. So look for the next supply to hopefully push price down. But if that doesn't happen and markets all of a sudden start to push up and there is a new structure that's broken here that is not in line with what's been going on, then now all of a sudden we have a change of character. That is how you know, change of character means I need to go look for an order block, part of that supply demand teaching that we have there. You must find the order block that is doing that, because when price comes back to mitigate, to cover these losses and go up, you want to be there. You can't guess when change of character is going to happen, but once you see it, you find the fresh area of value that caused it. I hope I'm coming across clear. Anyway, this is quite a lot of information that I've just dumped on you. Now, let me just quickly go to the Euro USD example of about yesterday. Yesterday being the 7th of September. I don't know when you're going to watch this, but if you want to go back to the charts, I'm bringing it up in case you ever want to go back to the charts to check if that light-skinned guy with the scar on his head wasn't lying to you. Right, this is Euro USD yesterday. The reason why I took this monster buy. If you watch my video from yesterday, you'll notice that I was saying a lot of sensible things. Number one, hey guys, the trend is down. I'm not looking for buys. The trend is down. Right. But look at the big picture, the trend is down. As a swing trader, the trend is down. What happened is, as a day trader, in terms of fractality of price and the sensitivity in smaller time frames, I told you, I literally did this in the video, so I'm going to do it again with you so you understand how everything that I've just said theoretically, how I took that trade. Number one, I looked for retail traders. You can see my chart is still mapped out. So we're just going to go straight to it. USD CAD also took a similar trade like that. We can go there as well, right? So yesterday when markets opened, all of this price action had not yet happened, right? So all of this wasn't there. What was there yesterday is the stuff in the white lines. You see this white line? So I looked at the previous day. The previous day, I noticed that markets always seem to get hung up here. Right, so that's, to me, smart money is brewing liquidity. You see that there, and then there's the support. Oh, and then markets get rejected, right? So this is what's going on here, and then you see that there, a little fake out test, right? So markets are kind of like, okay, and then markets broke out of this whole thing. Then now here you want to try and turn that particular, support into resistance. Kind of doesn't really work out. Then markets push up. Wait a minute, but markets all of a sudden stop at the previous resistance. So this is a 5 minutes chart, right? The smaller the time frame, the more detailed these levels are, but the more annoying they become. Boom, markets then open at 9. This is about 25 past 9. So during the 9 a.m. 1 hour candlestick, markets find support. Wait a minute, the support is still at the same place. None of these are trades I'm taking. I'm not stupid. Boom, sell side liquidity gets taken out. I'm just showing this on the whiteboard. Boom, all of a sudden, everyone was trying to sell here, loses money. And when markets come up, breakout strategies, open buys, right? Because now they think there's going to be a retest. Boom, markets take them out again. So sell side liquidity, buy side liquidity, it gets taken out. And then markets do the retest stuff and then push price down back to the support. Right? I'm like, this is interesting. This is 9 a.m., right? Nothing is hectic. I'm still recording yesterday's video to you guys. We check the timestamps. And I'm like, okay, I'm watching the stuff. And then immediately, when the same thing that I just showed you on the whiteboard happens, where the support is taken out, and then markets find a bottom. First of all, I had a 1 hour stop loss area somewhere here. I literally get taken out by a wick of 2 pips. And all of a sudden, boom, markets start to push up. Right, so that's how I joined. And if you remember, at the end of the day, I took my trades strictly all the way down to the 1 minute time frame on a very, very good order block. I sent you guys screen grabs. It's all in that previous video that I just did. Right, there we go. Right, after realizing that the support had been broken and smart money was just making moves, all I'm waiting for now is a change of character and price. Because remember, all you have to stop doing is giving me lower lows, right? If you keep breaking structure and going lower, okay, and then this happened, boom. Then my order block training kicked in. I was like, yeah, okay, I'm taking this buy. Took the buy, and away we went. Between there and there, I made $200. So 1 hour time frame, 1 minute time frame. You can imagine how small this order block is, about 4 pips. So I can use a very big lot size without over risking, because you don't over risk based on how big your lot size is. You over risk based on how big your lot size is times the number of pips in your area of value, right? And then markets ripped out a new one, and all that selling and all that resistance nonsense and all that stuff that was slowing price down the previous day didn't matter, right? Markets just kept going up and up and up and up and up and up yesterday. There's obviously the 1 hour time frame, but on the 1 hour you can see, as clear as day, markets kept going up, right? And this is what it is. So to end this video, not to make it unnecessarily long, you have to be in the business. This is where the 5 1 minute buys were, right? This is what happened the whole day yesterday. You have to be in the business of knowing your assets, understanding the rules that I gave you. And I did bring this up in the video as well because of my scenario analysis. But by the time the buy happened, which was at about 1:30, just before the New York session started at 2 p.m., I did this. I took out my info line and I realized that Euro USD has only moved about 40 something pips. Right? That's not what Euro USD does. Euro USD moves about 80 to 100 pips per day. And so if the movement isn't at the bottom, if the movement isn't to the sell side, then I should be behind this change of character, because the bigger move is coming up to the top, and it moved up yesterday 140 pips. Okay, so that scenario analysis stuff that I understood about this particular asset, my breakout structure, my supply and demand trading, finding where the retail traders are, etc. You can see on the chart for today's trading, today is the 8th of September, I've already marked again areas of interest. I used the 50 minutes time frame first, and then I'm going to drop down to the 5 minutes. I already marked it out again from yesterday's behavior. I'm like, interesting. Retail traders, support, resistance. Okay, cool. Once I find my retail traders, I'm like, Now let's see where smart money comes. If you see the start of some video that the part 6 video, not this one, I spoke about how smart money didn't trigger my 1 hour sell. Right, so I've got a sell here from that NFP candlestick last week Friday, and I had a pending order somewhere right there, and price missed my pending order by 4 pips, and I was starting to complain, and then I realized, wait a minute, that's good for me because I don't want to be part of this nonsense here, because what's going to happen is they could be using this supply zone, take out all the sell side liquidity here, right, and then drop with me, or use that, bounce, and take even me out in the process. But I'm glad I'm not stuck in this loop right now. And so all I've done is I've seen where my retail traders are, and then I've just marked out my supply and demand zones outside of those zones, because that's most likely where price is going to go and use given the direction of the day. So I really hope you guys like this video. I'd like to end it here. I love talking markets, and if I free up a schedule to do a video, I could go on for hours and hours, but I really hope there's something here to digest. Understand supply and demand. You cannot do that without taking the 365 course. It's not me pushing sales or whatever. I think 3 people have joined in the last 4 months. I don't live off the stuff, but it's important that you know it for your own trading, right? Get the daily trend going, understand it in relation to supply and demand, understand the different types of order blocks. That's obviously going to affect you big time. Once they're done, have a good mastery of the London session. All those videos are up on YouTube, so do review them. USD scenario analysis 1, 2, 3, 4, 5. You believe it or not, I do scenario analysis on about a total of 10 charts, and then I stock trade in the afternoons, and then I swing trade. But my swing trading is blind. My swing trading is called set and forget. So I just put orders and I move on. So it's hard to say this without sounding so stupid or like those Instagram people, but you must build a money machine around your trading. You must create those streams of income. So if I'm sitting here watching my London session take via day trade, as long as my swings are going well and I'm very patient with my swings, I never pressure my swings. I can hold trades for 6 weeks, 6 months now. It's something that you must develop. But in the meantime, I'm also not trying to affect the progress of the account with these day trades. Some of you, it's actually going to be very important that you have 2 trading accounts. One for swing and one for day, because you can't, remember, you're holding equity when you swing, but when you lose money every single day as a day trader, you're destroying capital. So at some point, you're going to have to be forced to close your swings too early, or you're going to lose your account, right? So keep those things separate until you've mastered this process, all right? But because of my understanding, I was just going through the rules with you. Sessions, right? And know your asset, very well. Is it more valuable than selling? Blah blah blah. All those rules that are put in. Make sure you understand liquidity, right? And this, I hope, has been very clear, right? Remember, liquidity is found in every single retail trading strategy. I know I said I'm gonna go, but since I still have you here, I hope I do, right? Just look at a simple trend line, an upward trend line. This is all liquidity, bro. Trust me, smart money isn't going, wow, look at all those beautiful touches, right? These guys are like, well, I can't really draw a diagonal, rectangle, stupid technology. But all of it, well, I'm going to struggle. But everything here below the trend line, right, this is all liquidity. Because you have to remember, I'm so sorry, man, that really sucked. That really absolutely sucked. Is there nothing I can use? All right, let's try again. It's not going to be the best, but my point is, below this liquidity here is people's stop losses. Because remember, people have been taught to buy at third touch, fourth touch, or whatever these touches are of the trend line. So all of this is buy side liquidity. And then people have been taught that when a trend line gets broken, there might be a retest. So when the retest happens, all of this area gets filled up with liquidity. That's why at 365 we always say trend lines are tools. Fibonacci's are tools. We don't take retail things, or we don't take tools as valid confirmations. I love my trend lines. I use my trend lines, but I use them with supply and demand. I just don't do it blindly. All right, 365. I really hope you enjoyed this video. Just don't forget, to think through these things in your trading. Don't forget to like and subscribe. Check out the links down below. And if you really like videos like this, let me know, man, because I'm taking a lot of time off in September to prepare for my live classes. And so in between those preparations, these small ideas that I have, I can quickly make them into a video format for you, and you might want to watch that, right? So 365, one more time, shake my hand. Thank you so much. I really, really hope you have a good day. I am outie. Peace.